Is it even legal? Hey guys, it's Eric from Hong Kong based in Germany. I've been investing since I was 17 years old for almost 20 years. I invest in all kinds of stuff: stocks, bonds, mutual funds, CFDs, options, you name it. Today I'm going to talk about an IPO. Imagine if Google is going to do an IPO again, are you going to invest in it? Well, unfortunately, in reality, they are not actually going to do that. I wish that I can travel back in time. But Google's equivalent in China, Baidu, is going to do its second IPO in Hong Kong on the 23rd of March. Unfortunately, I personally think that it is a non-starter. I'm going to explain to you why. First of all, the maximum stock price could be as high as 295 Hong Kong dollars per share. That is already higher than the share listed on Nasdaq. You need to take into account that one share in Hong Kong equals to 8 ADR or ADS in Nasdaq. The key problem is the fundamentals just do not add up. If you look at the numbers, revenue is stagnating, profits is kind of artificial, and the core business is under severe pressure with 5% of reduction of revenue, which is quite a significant number in 1 year, and there's no sign of recovery. So how about the new business, you may say? They are either under fierce competition with Baidu as the underdog, or they're not going to make any money anytime soon. Worse still, many of them are so small that compared with the overall size of the company, it's not going to make any significant impact if they make any profits at all. From my point of view, there are two potentially explosive contents that could devastate the stock price. One of them involves a huge chunk of the revenue of the company itself, and the other part involves very sizable M&A deal that could potentially drag the whole company down. Well, if you look at the fundamentals, there's no way that it could go up. But of course, I'm not ruling out that it would go up. You never know, because there are all kinds of crazy speculations, for example, related to electric vehicles. The mania with Tesla pushes up, for example, BYD and all other companies that has any kind of link to electric vehicles. So there's a potential that Baidu even goes up because of that. But this is not my cup of tea. I don't like to build my investment on thin air. I'd rather to have something else which makes more sense. For example, companies with really high and solid growth potential, companies with very high net asset value or cash compared with their stock price, even better with cash, of course. Or the stock that has a huge momentum to go up, for example, with some of the IPOs. But Baidu is none of this. I don't see a reason why we should speculate on Baidu. Anyways, without further ado, let's dig into it. So Baidu is looking to raise up to $3 billion in this IPO, potentially have an option to go up to $3.5 billion. It is kind of an insurance policies against listing in the US because of the tension between the US and China. You already saw China Mobile, China Telecom got kicked out of New York Stock Exchange. So putting politics aside, Baidu itself is not doing too well in terms of business. If you look at its revenue, it's around $16.4 billion, and around 62% of them, which is like $10.1 billion, is from search and advertising, which is their bread and butter, similar to Google. It went down 5% year on year, basically comparing with last year. This is quite a significant reduction, given this absolute size of the company. So how about the other piece of the business? Cloud. It went up 44%, which is quite impressive, but it's still quite small. It's counting less than 9% of the total revenue. Of course, if the growth continued to go like that, like 44% for the coming 5 years, then maybe it would be significant. But I doubt it would continue to grow at this rate. Even more interestingly is that almost a third of the revenue of Baidu comes from a company with a kind of strange spelling. IQIYI, ITE, which is a video on demand platform owned by Baidu and also listed on Nasdaq. And iQIYI is not even making money. It had a net loss of 7 billion RMB, which is around $1.1 billion last year. This is actually one of the explosives that I'm going to cover later in the video. So how about profits? Well, profits actually went up 10 times. Yes, 10 times. I mean, it sounds a bit artificial, to be honest, and maybe some kind of accounting tricks and stuff. If you look closer, most of the contribution came from cost reduction, 14% to be precise. This is actually not sustainable. If anyone with any common sense, you know that you cannot shrink into greatness. Saving costs is not the way that you can generate more profits. For me, more like cosmetic operations just to make the IPO look better. Another interesting thing is that according to the filings, 40% of the capital raised from the IPO would be used to invest in the so-called mobile ecosystems. So what exactly is it about? So Baidu is actually facing stiff competition and a shifting ecosystem. So people no longer go to PC or laptop to search for something on Baidu. Instead, they search within the apps that they're using. For example, there are some short video apps like Douyin, owned by ByteDance, or Kuaishou, which recently had an IPO in Hong Kong. Kuaishou is owned by Tencent. So this kind of short video apps already have bigger ecosystems than Baidu itself. So let's look at the numbers. Kuaishou, they have 769 million monthly active users as of February 2021. How about the other one, Douyin? Douyin has 600 million monthly active users as of February 2021. And more interestingly, they have 550 million monthly active users using search function for videos. So they are going directly stepping into the territories of Baidu. And in comparisons, Baidu's main app has only 544 million monthly active users as of December 2020. So you can see in terms of the touch point of customers in those ecosystems, Douyin and Kuaishou, this kind of short video apps, they already have a bigger ecosystem than Baidu itself. Of course, not everyone is going to use the search function, mainly they go for other purposes. Baidu is already losing out in terms of building an ecosystem around themselves. Or you can look at other apps. People even search on Taobao, which is owned by Alibaba, a retail app, or even WeChat, which is kind of like the WhatsApp for the West. WeChat has also hundreds of millions of users. But nowadays, they also introduce a search function that you can search for things. Or even Bilibili, the streaming app. The video streaming app itself is also going to be listed in Hong Kong. It's already listed in Nasdaq and they're planning an IPO in Hong Kong, which I'm going to cover in a separate video. Of course, Baidu also knows that there's a shift towards mobile apps. So that's the reason that they invest in iQIYI. And also last year in November, they also bought a company called YY Life. But these are actually the 2 points that I want to talk about later in the video. I think they are poisons and would have devastating effect on the stock price. So how about other business? I mean, cloud is the only bright side, I would say. It's growing 44%, and if it continues to grow like that, it would have more significant impact on the overall results. But other than that, for example, electric vehicles and autonomous driving, I mean, they're good hype, but autonomous driving is not going to make any money anytime soon, if any revenue at all. So just ignore it. So how about electric vehicles? Well, luckily there was some good news about electric vehicles because there's a joint venture just announced between Baidu and Geely. So Geely is the owner of Volvo, Lotus, and Polestar, etc. Going to build like around 20,000 premium electric vehicles by 2023. I mean, this is good news, but I would say in terms of volumes, it's quite small. And don't even think about profits. I don't think they're going to make any profits. This is not going to move the needle for the financials of the big company. I think it's just more like a reason for some speculation if the electric vehicle hype comes again, like the Tesla one or the one of BYD. But I myself wouldn't bet on that. So how about the explosive that I was talking about? Well, first one is ITE. ITE accounts for almost 30% of the total revenue of the whole company of Baidu. So last year, there was a company called Wolfpack Research, and they accused ITE inflating the number of people using it and also inflating the revenue. It is so credible that there's a formal investigation by the US Security and Exchange Commission. Well, what if this is true? 30% of the revenue from Baidu, I don't know how many percent left. How about the second explosive? The second explosive is about the recent acquisition by Baidu of YY Live, a video streaming platform. So Muddy Waters claim that it is 90% fraudulent. That is quite a serious accusation. But Muddy Water doesn't usually mess around without reason. If it is true, that would be disastrous because Baidu agreed to pay $3.6 billion for this company. So where does the accusation come from? It goes to how people earn money from the platform. So content creators, they will receive some kind of virtual gifts on the platform, which they can convert back to cash. The accusation is that many of the virtual gifts given out were actually given out by robots. And those robots were controlled by the content creators themselves. So the number of viewers and the number of virtual gifts given out were probably not as high as claimed. So that means the revenue and the number of users could be overblown. And Baidu agrees to pay $3.6 billion on this 90% fraudulent. What the fuck, is it even legal? That's crazy. Either one of these explode would have devastating effect on the stock price for sure. In summary, this is a company with stagnating core business, with little signs of the way out. And then the cloud business, yes, it's growing quickly, but it's still relatively small compared with the size of the company. Let alone autonomous driving is nowhere near to any revenue or profits. And electric vehicles, yeah, there's some good signs with joint venture, but the volume is extremely small. If it's going to make any profit at all, it would not have any effect on the overall company results. Of course, there's some small chance about speculating, with the concept of electric vehicles and autonomous driving. The volume and size is not going to have any material impact on the company. It's not going to move the needle. So how about the explosive I was talking about? I believe that they will have devastating effect. The stock price would go to hell if one of them explode. But this is not something that I would like to invest in, not even for speculations. And I believe that there are better options, for example, Bilibili. Click on here to look at my video about Bilibili IPO. What is your opinion about it? Feel free to leave some comments. If you like the video, please like and share it. It will be of great help to us.